The Dow Jones up 3 days in a row. Can we keep it up? Industry super funds are becoming more important than self-managed super funds. And can our stock market do well with all the headwinds locally? I'm Peter Switzer.
I'm Paul Rickard.
And we're mad about money. Paul, isn't it great to see the market turning around? Can we believe it? Can we trust it?
I don't think you can trust anything with President Trump, Peter.
True.
But look, for the US, 3 days in a row, stock market up, first time since November. That's a positive. Interesting also, I was looking at the figures this morning, how much the Fang stocks are up this month. That is just in January.
They're rebounding.
Yeah, see, stocks like Amazon are up over 10% alone in the month of January. Even Apple's sort of almost gone back into positive territory. So, look, despite what you've read, the US market seems like it's found a bit of a bottom. But it all depends on Trump and trade, and we're getting some positive noises, Peter, but we're not there yet.
Yeah, and the fact that you've underlined the Fang rebound, it is very much, those companies are related to the China trade issues, aren't they?
Well, they are, and they're also related, I think, overall to confidence. It does show you that if in a rebound, what the fund managers want to buy. They were oversold in December, but it says that this is where people think long-term investment money is to be made. So it's a real positive that that's where the money in the US market has moved towards.
And it seems to tell me that even though we're talking about the US economy slowing down, the fund managers don't believe it's going to be a bad slowdown. It's just going to be not as good as they thought maybe 12 months ago. Yeah,
look, I don't think there's any suggestion that this is the rule makings of a bear market. I think it's it's people looking for opportunities. But, the Australia's in a different situation and, again, Trump's not there on trade and you never know what's going to happen in the White House at the moment.
Yeah. Okay, let's go to the interesting story today that industry super funds are growing and they'll soon become more important for self-managed super funds in terms of the total money managed. What do you think is the reason for that, Paul?
Well, I think they're growing fundamentally for the major driver, of course, is the lower fees compared to the retail funds, Peter. Yeah. And the retail funds, these are the funds run by names like Colonial First State, BT, MLC.
Big finance companies.
The big banks have been slow to match the fees. So the industry super funds are cheaper and, all the graphs show that performance has been better over the longer term. So that's why they're growing. I think there's a bit of a, we're seeing self-managed super funds sort of just come peaking, and I think some of the changes coming up with potentially with Billy Shorten's tax changes is a bit of a negative for self-managed super funds, and I guess it's been a fairly tough market last year. People have found it a bit harder to manage money. So unfortunately, I think the industry super funds, or maybe fortunately, they can do more, but I suppose that at least on average, Australians are getting a better deal in super than they were before.
And it's more the case that the retail funds are losing share to industry funds, and that money goes into the industry fund area, and so the amount of money being managed by industry fund becomes bigger compared to self-managed super funds. They're probably losing a bit, but not losing too much.
And look, it keeps coming. It largely comes back to the fees they're charging, Peter. We keep saying, if you want to, we all our calls on radio, the fee you're paying to your fund manager makes a difference, or your super fund manager makes a difference, right? Some of the people are still paying 1.5%, 2%, even over 2% in some old funds. I mean, most of the industry super funds are around 0.8% or even lower. So, look, it does matter, and that's why they've been growing. As you say, it's been really at the expense of the retail funds. I think the self-managed super fund industry probably peaked, and it's got some challenges as we move forward. Yeah,
exactly. And on that subject, let's talk about, will our stock market be headwinded, if such a word exists, because of local factors? So let's imagine Trump gets a trade deal, Wall Street goes up, we'll go up, but I feel as though we might go up at a slower rate in the first half of this year for a number of local headwind reasons.
I mean, there are really two big headwinds. I mean, there's probably three big headwinds that the market has to deal with. Number one is the election, and we all know that that's going to should be in May. Look, it's probably a foregone conclusion, but maybe what would be interesting to contemplate is what happens if the coalition actually won. And how much of that is factored in, and how much of some of the policies that are really investor negative from Bill Shorten could change still. Obviously, the second one, we've got the Royal Commission. I think the Royal Commission findings due out on the 1st of February, and then also how the government responds, and that again could be in two phases. It could be the Morrison government responding initially, and then Bill Shorten saying, hang on, we're not happy with what the Morrison government
I'm sure he will say that.
And we're going to respond to it in July. So but I think that's more likely still to be a positive, so the market's question of how much negative reaction the market's already factoring in.
Yeah.
That's headwind number
And you
2.
think that there's been an overreaction on banks, and probably when the real facts come out about what's going to happen, there'll be a bit of a rebound.
I actually think the changes won't actually be that bad for banks in the long run, all right? I mean, I think things like responsible lending is actually probably more a positive than a negative. So there'll be changes in the industry. Your mortgage brokers will find their commission structures are going to change, but that's not necessarily a bad thing for banks, right?
Yep.
So, look, a lot of that's already factored in. I think the third headwind is we've got to get through a reporting season in February.
Yep.
We have 2 seasons, February and August, and we're not too far away from that. So,
what's the view on
the
earnings?
question on that, I think, Peter, is really has there been any slowdown in the economy locally to impact that?
Yeah, and the interesting thing, I think the only scary thing we've seen on the economy lately was that Kathmandu came out with a bad report, but I don't see how Kathmandu is necessarily a bellwether company for retail. But the thing I'm reading is that foot traffic's down in stores, but online sales are up. Now, what's the relative profitability for a company? We don't know.
That's a good question. And look, and again, we're now in January. And if there are going to be any warnings, they'll start to come out probably next week when some of the companies get back. But look, we've only had one bad one so far. So, look, earnings season could yet surprise on the upside, I think. But,
let's hope so. I'm Peter Switzer.
I'm Paul Ricard.
We're mad about money.